as long as the view of the commodity is positive, those funds will flow into those products, and the institutional market will have more money to play with, to either buy the underlying commodities or to buy those equities. I don't think we've seen a big shift yet in terms of that thing everybody in the mining investment community is waiting for, which is for the big shift on generalist investors to come in. But I think there's enough green shoots out there where people are talking about it.
Hello everyone, and welcome to another edition of Triangle Investor Interviews. I'm your host Lucian Valkovic, and before I announce my guest, just a quick reminder of a disclaimer. This interview and all my interviews are not a recommendation to buy or sell any shares, products, or services. Always do your due diligence and consult with your financial advisor. My guest today is Lon Shaver, president of Silvercorp Metals. Lon, always good to see you. Welcome back, sir.
Thanks, Lucian. Good to be back. Good to see you again.
Thank you very much. I always enjoy our interviews, our sessions. I want to start this one with the broad silver question. Silver prices have surged to more than $50. They retreated. Now they are back at the $50 level. My question is, what do you think attribute this rally to $50, and where do you see prices heading by the end of this year and into 2026, of course?
Well, I mean, I think the move in silver prices has obviously been driven off, and it lagged, the big uptick that we saw in gold. And so I think as investors have been feeling more positive towards gold, that positive sentiments rubbed off on silver as well. And on top of that, silver, as we've talked about before, has just a very strong supply demand fundamental backdrop behind it. And again, from a demand case, remains strong. Supply side, obviously, new mines, getting more production out of mines isn't the easiest thing in the world, these days, because of the challenges with permitting. So I think that has people feeling positive about silver.
That's a good point, and I want to touch a bit on the primary silver mine production. It has been declining long term, with much of global supply coming as a byproduct of base metals mining. What challenges, you named one, however you can expand, what challenges do primary silver producers like your company face in expanding output?
Well, I think it's having, again, do you have the ability to permit that growth? Do you feel, comfortable, with the long-term price of silver to make those capital investments? Where does the funding come from? Obviously, with the renewed enthusiasm in the commodities, the equity markets have picked up. A lot of companies have been able to, raise money to make those investments. So we may start to see some growth in investments, and just even over the last couple of days, seeing some silver projects get permitted. So we may see some supply coming on, but again, none of these things happen overnight. So I think we could still have a reasonably tight market, as you say, on the primary side.
Exactly. Investment demand through ETFs and physical bars has been a wild card, with record inflows in some regions, like, for example, India. How do you see retail and institutional investor sentiment shaping the silver market right now?
Well, I think that's really driven off of the end consumer, whether that be in physical or in owning those ETFs, and as long as the view of the commodity is positive, those funds will flow into those products, and the institutional market will have more money to play with, to either buy the underlying commodities or to buy those equities. I don't think we've seen a big shift yet in terms of that thing everybody in the mining investment community is waiting for, which is for the big shift on generalist investors to come in. But I think, there's enough green shoots out there where people are talking about it. And as long as we, don't have the prices of, gold and silver collapse, which, I don't think is going to be the case, I think we'll be gradually winning more and more, converts over to the sector, see more dollars come in. And then, as you point out, the investment side is a bit of a wild card. But I don't think we really saw that many people selling their physical, into a $50 US
Yeah.
silver price, and that's $50 US. Obviously, a range of different performances depending on what your home currency is.
$50 US plus here in Europe, VIT plus premium, it's more of a $70 silver. Let's touch on the company developments. You have just returned from China. What were the main takeaways from this site visit you had over there?
Well, we try to get over at least once a year to bring analysts, either existing ones that cover us, or prospective analysts and some buy side investors over. This time around, we had the two analysts from Cantor and Cormark, who recently launched on the company. They came over. We had an analyst with a brokerage firm in China, and we had a buy side investor come to us to come to visit Ying with us. For the two analysts, it was the first time seeing a mine in China, and actually even visiting the country for that matter. And they may have come on with maybe some preconceived notions about what it is to run a mine in China, as well as the country. But we think that they left with very positive impressions of both. Ying shows very well as a modern, well-organized, and efficiently run operation, on par with any Western mine. And I think we reinforced with the visit that despite 20 years of continuous production, we're finding more potential, and that's justifying some of the decisions that we've been making, investing in surface infrastructure, expanding mine capacity, and then there's been a few even new surprises even for us since the last year that we were there.
Yeah, you said you're visiting every year. Anything different or noteworthy since your last visit in the Ying to the Ying operations?
Well, I think notably, we've announced and we've brought in a bunch of EV trucks for ore haulage, and so we noticed a lot more of them driving around the site. We've also brought in some robotics into the mill facility. So there's a big robotic arm that we've acquired to use to assist with reagent additions. But then I think most notably, as a result of this drive to open up the mines and improve ramp access, we've identified another zone in one of the mines. And this zone is bigger and wider than some of the other areas we've been mining historically. So we were actually able to visit a long hole stope. So rather than sort of much tighter and more selective mining, this long hole stope is something new. And it was interesting to see sort of larger scale operations being run at the Ying facility.
Excellent. Let's turn to your financial results. Your company delivered a strong Q2 fiscal 2026. What drove this performance?
Well, really, it was the increase in metals prices, like we were talking about just before. Our realized selling price for silver was up 28%. Realized selling price for gold was up 37%. And while silver production compared to the quarter of last year was relatively flat, the amount of gold that we sold was up 64%. So that was a nice top line contributor. And overall, the cost at Ying, as a result of this shift to more mechanization, we've actually seen some reductions in costs on a per ton basis. And what that meant is our all-in sustaining cost to produce silver at Ying was $11.75 an ounce net of byproduct credits. So from a mine contribution standpoint, I think we had mine operating income of approximately 40 million, and Ying was 38 million of that in the quarter. So really the kind of quarter that shows the power that Ying has to deliver profits.
Let's stop on 11.75 all-in sustaining costs. Do you expect those kind of numbers to continue going forward?
Well, that's obviously a function of our mine site cost per ton, which, as I said, we've been doing a good job controlling that. It is a bit of a function of byproduct credits, both volumes of gold, lead, and zinc sold, as well as the pricing. So some of that is going to be determined by how those metals prices move, as well as how much production we get out of those byproduct credits. But we're not anticipating any big bump up in our production costs.
The company ended the quarter with strong cash position. How does this support your growth and investment plans going forward?
Well, as we've indicated, we're fully funded to build the El Domo mine in Ecuador as a result of the 175 million stream contribution. And subsequent to the quarter end, we did get the first installment of that amount from Wheaton. So we did receive just under 44 million from them on that. But what we've indicated is that we've built this cash position so that we can be out there and aggressively looking at opportunities to buy other assets, either operating mines or development projects. And we remain very active on that front, looking at new ideas. And so growing this cash position really has been the objective for this is to be in a position to move decisively and grow if we see something that we like.
Since you mentioned the El Domo project, what's the latest progress over there?
Well, I think the latest progress is really just getting the camp in. That is, the most notable addition. Obviously, if you follow along in terms of what we've been posting, in terms of photo updates, in terms of the existing road, site infrastructure, starting the construction of the tailings dam, these are all infrastructure components that are necessary. But putting in this camp, which is about 480-person camp, is really kind of the next item that's needed so that we can move ahead with the next sizable commitment, which would be signing of the bid contract number 2, and that's to identify and hire a mining contractor to start pre-stripping the pit, as well as going into the mining aspect of the ore. So we think we'll be in a position to sign this contract towards the end of this month. And then, as I said, with the camp set up, be in a position that we can move ahead with that contract and the next stage. As well, we have made some equipment deposits on some of the pieces of equipment that we know are necessary for the El Domo process plant and working through that. But with some of the metallurgical testing, we're just finalizing some of the results from some of this additional testing that we did this year. And it's either going to be additive and add some positive results and maybe produce some minor changes in the flow sheet that we'll have to accommodate, or we'll be back at kind of the base case. So it's only a as good or better type scenario on that, but we should have some news on that shortly.
Okay. What are the next catalysts for your other Ecuadorian project, Condor?
Well, Condor is right in the midst of doing a PEA right now, and we're expecting that should be complete by the end of the year. And tied in with the PEA, we're also working on the permitting to be able to drive 2 exploration tunnels underground so that we can access the ore body. And that's so that we can do more detailed drilling of these higher grade structures that we've seen. And that would form the basis of a decision as to whether to go ahead with an underground gold mine at Condor. Mm-hmm. And the beauty of it is these tunnels that we're driving for exploration purposes once they're complete, they would also be available to transition to mining once we have the surface infrastructure permitted and built as well.
Okay. As the largest shareholder of the New Pacific Metals, how is your company supporting their development efforts in Bolivia?
Well, I think notably, we participated in the financing that was done after the end of the September quarter end. So we maintained our stake in New Pacific. And what this money allows them to do is to continue advancing both projects, but notably also pushing forward the Carangas project, which is called the second project in the company, and is in a different district than from the flagship Silver Sand. And really, for New Pacific, the priority right now is mostly focused on permitting efforts to be able to move ahead with development of either or both of those projects. But we may see a bit more technical work done at Carangas because we think there is significantly more potential there, both in the existing deposit and looking at not just the PEA was looking at the sort of the shallower silver zone, but starting to think, bigger scale and looking at the big gold resource underneath that silver zone.
Okay. Are there any assets that you have that we didn't touch on, your non-core assets that you will do some exploration or any work?
Well, I think we've talked about the key ones. I think one call it non-core asset, but certainly more interesting in this environment is the BYP project that we have in China. It had been an operating mine. The economics of it as a lead and zinc mine weren't the best, so we put it on care and maintenance. But there is a gold resource there, and at 500,000 ounces, and in this gold price environment, and a brownfield site, we think that there could be some hidden value in this project, and we're working through getting to get a permit to reopen it as a gold mine. And should we be successful in getting that permit, we'll have a bit of a decision to make as to whether to sell this project, to list the project, or potentially develop it. But
Yeah, makes sense.
it's not something that gets a lot of attention, and we've been waiting on some progress in the province to be in a position to apply for the mining permit, and now we have that, and so we're moving ahead with that strategy.
Okay, Lon, what's your take on the current share price? Is your stock still undervalued?
I think we've done a good job of tracking with our peers in the sector, but overall, looking at how we rank and rate relative to our peers, yes, we would be undervalued. And I think as we go forward and continue to demonstrate the progress, profitability at Ying, but also the fact that with bringing on these other projects in Ecuador and potentially somewhere else in the world, that there's a potential for a re-rate for our shares for investors.
Okay, Lon, final question, news flow from the company. What can investors expect in the upcoming period?
Well, I think in the near term, it's going to be Ecuador focused in that the Condor PEA should be out before the year end. If it comes out or looks like it's going to be very late in December, we'll probably push that into January. But that would be a key catalyst to identify what we see as a new growth asset for the company. And then obviously the update on El Domo, just further demonstrating the progress that we're making towards getting into production, I think will be the next real notable update for investors.
Okay, that was Lon Shaver, president of Silvercorp Metals. Lon, thank you very much for joining me today.
Thank you. Always a pleasure.